Welcome to Lunch Money. You have tuned in to the online and social media home for special situations, workouts, and capital raising professionals. My name is Nick Samios. I am the director here at Hermes Capital, and I am your Lunch Money host. So a very, very warm welcome to you. Today, we are going to put the spotlight on small business. We're going to ask the question, what are small businesses doing well, and what could they do better? I get the feeling I was lucky enough to be in Brisbane this week, and I must say that everything is very upbeat up in the sunny state. So good luck to you all up there. But I do get the feeling that it is a two-speed SME sector. So we have Matt Atkin from who is the current president of CAFBA, the current Commercial Asset Finance Brokers Association, who will be joining us, and I have Louisa Sijabat, who is a director of Vincents and insolvency practice here in Sydney. But before I go to them, I would just like to remind you to share, like, or subscribe to our humble podcast and live stream here. Don't keep us all to yourself. Share us with your friends, and we can all benefit from the wisdom and knowledge that comes from our very special guests every week. Now, without further ado, I'm going to introduce our first guest, Louisa Sijabat.
Hi, Nick.
Hey, Louisa. How
Thanks
are you
for having
going?
me on today.
You are
Well,
very, very welcome. Excellent. Now, Louisa is a trustee in bankruptcy. She's a liquidator, and she is the director at Vincents. At Vincents, she leads the firm's Sydney insolvency and restructuring team. Did you come from Brisbane, or were you always?
I've always been a Sydney girl, born here,
Right.
Grew up here, schooled here, worked here. I've never actually worked in any other city, so Sydney it is through and through.
Okay, but when Vincents made the big move to Sydney, you were the tip of the spear.
Well, hopefully so, and just doing my best, Nick.
Okay, very good. All right, Louisa. Well, what has been keeping you busy this week?
Lots of new inquiries, actually. So ever since about the third week of January, we've had quite an uptick in inquiries. And it's come from a whole range of industry sectors and a whole range of people making the inquiry. So we've had, say, a restaurant inquiry. That was the restaurants in Sydney, so hospitality type thing. Had an inquiry about a retailer, also Sydney City based. So that's the retail industry. Had inquiries across the travel and tourism industry. So it's really quite spread, but the industries themselves are not a surprise to a lot of people intuitively. We've had inquiries from the company directors themselves. We're also getting inquiries from trade suppliers looking to liquidate or bankrupt those who haven't paid. I haven't had an ATO inquiry in a little while, but I have heard that they're starting to pick up. I've also had a safe harbour inquiry, so somebody looking to potentially safeguard themselves against an insolvent trading claim if the restructuring they want to do doesn't work out. So a real cross-section, but a real pickup in the number of inquiries compared to 2020. So I think people are beginning to actively think about what happens at the end of JobKeeper, whether they're still on it, or even if they're not, what happens because their customers might be on it, or what's the flow and effect.
Right. Well, you just preempted my next question to you. I was going to ask you, it sounds like you're getting two kinds of people asking questions. One is the people that may be wondering about what's going to happen to their business when JobKeeper comes off, and other people who are maybe wondering how they're going to get paid when JobKeeper comes off. You're talking to a lot of accountants. What's their major concerns?
Making sure that their clients are ready for the end of JobKeeper. Accountants do know that a lot of their clients don't like doing paperwork and can be slow to get them things. They might not be as proactive as they need to be. And sometimes what I have heard through the accountants is that clients only like to do what is required by the ATO. We'll lodge the BAS because we have to. We'll lodge the tax return because we have to. But clients sometimes can be a bit hesitant about getting their accountant involved in things like budgeting and cash flow planning because they're like, oh, surely we can do that on our own. And the majority of time they either don't do it or don't do it well. And so I would pick that as something that businesses can do a little bit better on, make sure they're planning their cash flow ahead of time.
Okay. Well, look, we'll get to that shortly. Look, just before I introduce our next guest, I am curious. This small business restructuring. I'm not talking about the simplified liquidation, but the small business restructuring. I think there's been maybe one, possibly two. Certainly that I've noticed. If there's more than that, it'll only be one or two more than that. We're now the 26th of February, so technically, 57 days into this year. Now, the Prime Minister or the Treasurer, I can't remember who it was, extended safe harbour for small businesses on the basis that people such as yourself were going to be just too busy. So are you just absolutely run off your feet and you've squeezed us in today because you're flooded with small business? I mean, what's happened?
Yeah, you're so right. Small business restructuring hasn't taken off particularly quickly. In my opinion, there's a couple of thoughts for that. Firstly, it takes time to get used to a new system and a new piece of legislation and something new for company directors who wish to try and rescue their companies and their advisors who are advising them on it. So I think it does take time to educate directors and their advisors, such as accountants and lawyers, about the process so that they can work out if it's a good fit for them, who it's a good fit for, and then for that situation to actually arise. So I think there's still, functionally, I think we're still in an education type of phase. I think the reforms are good for small businesses because they give the opportunity for the small business to have their director stay in charge of the company while they try and restructure it, which is something we haven't seen in Australia. So it's really quite exciting. But I think people are still learning about it. So I think that's why. I think it will become more popular. But at the moment, you're so right. There's so few of them in Australia. But I think it's something we're still learning as an industry.
That could be one right now. It sounds, look, it sounds like it's full of good nutrition, but tastes terrible at this point in time, and so nobody's biting. All right, listen, Louisa, we're going to put you back in the waiting room there, and we're going to introduce our next guest, Matthew Atkin. G'day, Matthew. How are you going?
Hey, Nick. How are you, mate? Thanks for having me.
Very well indeed. And Matt is coming to us from Melbourne, so that's very exciting. Now, Matt, you are a principal at Atlas Broker, so you're a commercial finance broker, financing all sorts of equipment, and you have been doing that for many years. But for your sins, and if you don't feel it's for your sins yet, I bet you will by the end of the year. For your sins, you are the current president of the Commercial Asset Finance Brokers Association. So just tell us, just in a nutshell, tell us what CAFBA is, and then tell us what it is that's been keeping you busy this week.
It's the Commercial and Asset Finance Brokers Association, and obviously we represent the commercial brokers across the country. We're really focused on education, we're really focused on advocacy, and really trying to lift the standards in our industry to allow great customer outcomes. And that's really what CAFBA is all about. In terms of my week, it's so diverse now, having so many hats with obviously CAFBA and my Atlas broker role. From being a commercial broker and running a business, we're really turning our attention now from a defensive mindset as a business owner to being quite growth focused in terms of our business, and so we're putting on new staff and being aggressive with our targets. So that's been really important for us. But from a CAFBA point of view, really interesting week. I've been up in Canberra for dinner with Michael Suka, the assistant treasurer, talking about the responsible lending, which is primarily consumer-based, but obviously has some implications within commercial, unintended, and preparing for the Senate Economics Committee in about an hour's time as well. So wow. It's quite a diverse week that I've had.
All right. Now, some of my friends on Twitter are they're mad about this responsible lending. My personal view, which I'm willing to take a risk that I'm at odds with you, I'm not sure, but my personal view is that if mum and dad want to sit around the kitchen table and decide that they're going to toss their jobs in and hock their house and buy a business and give it a go, they should be able to do that. I don't personally like the idea of the government intervening, and I think that the responsible lending legislation was a knee-jerk reaction to an American problem. Like, we didn't have the no income, no job home loans here in Australia, And I feel as though the treasurer at the time, it was Wayne Swan, knee-jerk reacted to that. But that's just my view. What's your view?
Well, my view is I think it's fine to have some consumer protections in there, but they shouldn't be hamstringing lending to the point that they are. So, and I speak purely from the commercial point of view, and that the unintended consequence of that legislation is that we've got small, medium enterprise who are struggling to get finance when perhaps they shouldn't be. And that's what I'm focusing on.
Yeah, because look, for a while, I mean, tell me if this is still the case. For a while, even though, I mean, in black and white, my understanding is that the responsible lending, it's not supposed to apply in the commercial space, but that a lot of the banks were behaving anyway. They were applying the same sort of safeguards to the commercial space. So it was very frustrating for brokers who were trying to say, but hang on, this is a commercial deal. It's not a consumer deal. Is that still going on?
Yes, it is. Yeah, absolutely. Yeah. We've got examples we'll talk about today. So our role is to really try and highlight that and make sure that practice stops.
And so aside from, now I remember when we were at real risk of those consumer laws applying to the commercial space, and CAFBA did an outstanding job of advocating for small business at a time when other small business voices, I think, were getting a little bit confused and saying, oh, yes, we must protect small business, but not realising that by wrapping them in cotton wool, you were stopping them from being able to borrow. And CAFBA really cut through that, which was fantastic. So what else is what else is on the agenda for you guys, apart from this responsible lending? What is it that you're doing for commercial brokers and by extension for small businesses? What's top of the plate, top of the agenda?
That's number one at the moment, and further to that, it's talking about access to credit more broadly. We've obviously had a lot of businesses go on relief, and we're trying to work through that because we want to make sure that servicing isn't impacted by that. So we're talking about that. We're hoping to see a reinstatement of a lot of the products that got taken off the market, so lending becomes more easily available to our members and their clients. But then, as a sort of a longer term position, we're in the process of we're about to release our next 3-year strategy, which will really be heavily tilted towards education and professionalism. There's a lot of talk in the market about diversification of mortgage brokers into commercial, and we welcome that, provided they've got the right education, and we're looking to provide those courses. We've set up the Education Council, which is headed by Terry Moody, which is doing amazing things right now. So there's already a Cert 4 and a diploma course, and obviously we're working on the Australianisation of the TLFP, which is pretty exciting. So really the next 3 years is going to be a continuation of the advocacy, education, professionalism, and engagement with our members.
Right. Yeah. Well, that's interesting. Look, traditionally through my my life in commercial finance, equipment finance brokers have been a very distinct group, and they're very commercially focused. And obviously mortgage brokers have had a different focus. It is different. Mortgage brokers, I've always thought they sort of live in a more genteel sort of space where there seems to be time, whereas with equipment finance brokers, it's always the client always needs the money yesterday. I mean, we funded a matter the other day. We funded an aircraft, and we couldn't understand why everybody was so agitated. It was because the client had taken delivery of the thing 2 weeks ago, before the thing even hit our desk. So everybody was very agitated. Okay, well that's interesting. So you're seeing, so part of the role of CAFBA is then bringing other mortgage brokers into the fold and educating them in the ways of commercial finance.
Yeah, absolutely. We're really happy to do it. Diversification is important. Competition gives good outcomes for clients, but they've got to be educated to the right level, because whether you call it genteel or not, but you'll tend to find that the commercial and asset finance or equipment finance scenarios, every one of them is different. And so that takes a while to understand how to put that together. So we're just trying to make sure that they've got that expertise, whereas in a mortgage, it tends to be more homogenous with the process.
Okay. All right. Well, look, we will bring back Louisa. And Louisa, just while I had Matt there, because I've need reading glasses to read, but I look much more attractive without my reading glasses. So, Jill Lawrence has put a question up. Let me just flash it up. Now, this Jill Lawrence, I think, is from the Institute of Chartered Accountants. I think. I hope I've got that right, Jill. What does apply to SMEs as a threshold for issuing statutory demands? If that were to increase, how would it affect the flow of finance? I'm going to toss that to you, Louisa, to begin with. So, yeah, so let's think that through. The increase, what's the current threshold for statutory demands?
$2,000. So in order to issue a statutory demand to a company, which is usually one of the precursor steps before putting another company into liquidation, that they haven't paid a debt to you or to your company of at least $2,000. And there's talk of increasing it at the moment to $10,000, because what's happened in the bankruptcy system is that the bankruptcy notice, which in some ways is kind of like the equivalent of a statutory demand but for individuals, went from being $5,000. So if somebody hadn't paid you $5,000 before, you could issue them a bankruptcy notice and then bankrupt them, whereas that has now increased to $10,000. So if they owe you $5,000, $6,000, $7,000, you can't bankrupt them anymore. And as an example of the real flow and effect of this, I was talking with a lawyer who works in the strata levy collection space, and he was saying there's all these people who haven't paid their strata levies. It's gotten to the stage where we might need to consider bankruptcy. The threshold changed, and all of a sudden he's like, well, now we can't bankrupt a lot of them. So how do we go about collecting this money?
Right.
So there is a real flow and effect from raising a threshold level. So that's already happened in bankruptcy, but it hasn't happened with statutory demands yet. Statutory demands being issued to companies rather than to individuals. So there's real talk about what happens if it increases.
Well, now I guess from Matt's point of view, though, he's trying to set finance, and the last thing he needs is he puts a deal into Macquarie Bank, and all of a sudden, one of Louisa's good friends has put a statutory demand notice on them. So I suppose from your point of view, Matt, you'd like a higher threshold, I suppose, to reduce the possibility of nuisance stat demands. Would that be a fair? Do they ever sort of stifle your ability to get a deal approved?
Well, not normally, and when I'm talking my Atlas broker hat on now, not really. We don't see them too often, so it doesn't really impact me. But from an applicant point of view, I'm sure the higher the better for them.
Yeah. Okay. Well, look, let's stick with you, Matt, as we talk about what, in your experience, where you see SMEs going well. So let's start off by asking the question: what are SMEs doing right that other professional advisors, be they finance brokers, accountants, lawyers, or SME owners themselves, you must be seeing some that are really getting it right. Firstly, before we sort of get right down to the SME level, what about at the industry level? What industries seem to be going well for you?
It's pretty well publicised. It's transport's doing well, logistics is good. We're finding that there's quite a few manufacturing clients that are doing okay. Civil works, earth moving, etc., are doing reasonably well. So they're the ones that we're sort of seeing a lot of strength and perhaps growth. There's a talk of the K-shaped recovery. There's obviously others that aren't, but they'd be the ones that we see pretty strong balance sheets on at the moment.
Actually, I wonder if I can impose on our producer just to flash up that headline from the Brisbane Olympics. I said a little bit earlier I'd like to take the credit for this because I was up in Brisbane when it was announced, but that's probably not fair. But that must be great news. It's not 100% confirmed yet. I don't quite understand the process. And I appreciate it's a 2032 games, but you were just talking, Matt, about earth moving and civil works and all that sort of stuff. So that must put a real spring in the step of some of your clients.
Oh, it will. I mean, and I think we're going to see a sustained period of government funds coming into civil works and projects as well. So perhaps this extends that out further. So yeah, it's very welcome. As I said, it's sort of gone under the radar. I haven't seen a whole lot of hoo-ha about it, which I'm surprised by, because I know it's not confirmed yet, but it's certainly pretty positive news.
Well, that's because you're in Victoria, Matt. Whatever goes on in Queensland, maybe less concerned.
We're locked in our house. That's why we don't look up there.
Now, So that's I guess good from a finance broker's point of view, because you've got big heavy trucks, nice big Tonka toys, the big yellow goods, and cranes,
Yep.
and they're all nice big ticket items, and they'll certainly help. They'll certainly help from the commercial finance broker's point of view. Louisa, stepping aside from industries, because you mentioned before the I guess the ones that we would have anticipated would have trouble, the hospos and the tourism. So just moving away from industry, but just looking at regions. I mean, Vincents is, well, certainly you're across the eastern seaboard, aren't you? You're in Queensland,
Definitely.
New South Wales, Victoria,
We're
WA?
actually not in Victoria. So
Right.
we originated in Brisbane, and
Right,
we
yep,
expanded up and down. So we've got Gold Coast and Sunny Coast offices.
yep,
We
yep.
have a Sydney office, obviously, and we have an ACT and Adelaide office. So we're actually
Adelaide,
not
wow.
in Melbourne, but we do cover Melbourne out of Sydney,
Yep.
and we cover Northern Territory primarily out of Queensland and WA, depending on who's speaking with the person over there. So we do cover Australia-wide, and Tasmania, of course.
So which regions do you think, which regions are going well? I mean, you obviously, from your perspective, which regions seem to be doing better than others?
My personal views, I think New South Wales is going quite well. I think the recovery is going quite well, and things are picking back up. Queensland is a state quite heavily dependent on tourism, so that is hurting for obvious reasons. However, mining and things like that, I'm not an expert in this area, but I know that there's issues with trade and things going on with China, as well as prices. So I don't know the exact impact of that, but that's got to hurt in some way, I would think. So I think it is dependent. I know you were saying let's get away from industries a little bit, but I think it is still dependent on industries and region as well.
Yeah. I guess. Look, I was in Brisbane this week. I'm going to Melbourne next week, and I'm hoping to go to WA the week after, assuming there's no breakouts anywhere and no sort of silly rules come into place. Yeah, but I mean, WA is going gangbusters, is what I'm told. You've got a presence in WA. CAFBA has a presence in WA. Matt, what sort of feedback are you getting from them?
One of the guys I spoke to over there, who's a leading broker, had his second busiest year ever last year.
Right.
So that's just sort of gives you some context of WA's, where WA is at. I think from a Victorian point of view, which is obviously where I am, we've spent so long in lockdown, and you can see it. I can see it from Atlas's point of view. We got really heavily hit by the volumes coming out through that period, through the lockdown period, but then, coming through that into the December period, our pipeline grew by 230% in those months compared to the months before. The income hasn't really started dropping yet because we've got delays in equipment being able to deliver to the country, which is another issue, which is going to impact down the track, I think, when we look at volumes from May, June, with people trying to settle for the accelerated depreciations. So that's going to be an interesting scenario. But we're seeing Victoria now really growing. I know New South Wales, our business up there, is doing okay, and we've got guys up in Queensland are doing well. So it's sort of I think it's actually more industry based than state based that are the issues. Right. But I think the big issue for small business with regions is the border closures, and that's really impacting the ability to be able to even plan to like, I run a business across the country with my business partners, and you can't even plan to go to your offices anymore. So it's that sort of stuff is incredibly hard to run a successful small business, and that's been mirrored in every industry. So
I must say, there's we can do stuff over Zoom and telephone calls and all the rest of it, but I found just going to Brisbane, I was able to get my hand on some work that, maybe it would have come to me anyway. But, I am worried about making it to WA, because if anything breaks out in New South Wales or Victoria, then I'm cactus. But, what you've got to make plans.
You do.
Now, and then at the SME level, the SMEs, putting industry and regions aside, when you walk in the door, Matt, or if you're talking to them or Zooming with them, what's going well? What are they getting right? Where are they succeeding?
Firstly, we're trying to walk in the door now. I think that's the first thing that's important. What they're doing well, as I said, I think there's a lot of businesses that have got a renewed focus on cash flow and balance sheets, where perhaps they didn't before. I think when everything was sort of felt like it was just sort of moving along nicely, they're less focused on that. But so I feel like there's a lot of talk, proactive conversations going on between their advisors and the SME business owners, which has been great. So you get to the other end of the pandemic now. Hopefully, we're on the way up, and it really opens proactive conversations. So as a commercial broker and a consultant with those businesses, you're really able to help them because you're talking about what they need for that next step. So I really enjoyed that. That's the one thing that I would say has really improved in the last 9 months there or thereabouts.
And what the accelerated appreciation? Is that still there's still an enthusiasm for that?
Oh, massively. Yeah, absolutely. I think it's a terrific program, and there's still SMEs that are right into it. Accountants are all over it. I said I think the issue is going to be supply. I think that's, and we're trying to get that message out to our clients now that, order now because supply is an issue. Some of them think it's a sales pitch when it's genuinely not. It's, you guys need to do it, otherwise you're going to miss the boat this year. Yes, you can still claim it next year, but if you're looking for that deduction in June 30 this year, you really need to be ordering, especially your stuff that's coming from overseas. Order it now.
Well, used car prices are an indication of that, and they are absolutely insane, used car prices, and that's for exactly the reasons that you're talking about. And my understanding that applies right across all capital goods. So be they drills or yellow goods or whatever they might be. So, Louisa, before we turn to what we think SMEs can do better, what do you see them doing really well at the moment? What are some of the things that you see some small businesses doing well that maybe other small businesses could learn from?
Yeah, I've seen really good adaptability through 2020 and continuing on to this year. Everyone loves and hates this word pivot, but in reality, people are doing it. People are innovative. People are resilient, and that especially applies to business owners. The things that they've managed to adjust and change to try and thrive despite the landscape changing and despite really huge uncertainty. And uncertainty is hard for business because businesses do try and plan a bit ahead and set themselves up for things. Uncertainty is really hard. But I've seen really good adaptability, flexibility, innovation through this period. I am an accountant underlying things, so I have to add that 2020 was also a year where a lot of business owners talk to their accountant way more than they usually would. And hopefully those accountants have been really helpful to them, help them through JobKeeper, help them through getting all their lodgements up to date if they weren't already. And that close working relationship is something that I hope continues because I think it'll bring really good value for small businesses.
Okay. All right. Well, look, let's move on to what they could do better. And I'll stay with you, Louisa. You mentioned before cash flow forecasts, I think you said. I mean, what could small businesses be doing better in that regard with your accountant's hat on?
Yeah. So firstly, doing them would be the first step. And then also tracking actual results. So it's all nice to have a plan, as we all know, but if you're not tracking how you're actually going compared with the plan and writing it down, then some of the plan does lose some of its value. So small business owners wear so many hats. We all know that. And they're pressed for time. They're busy. They're trying to look after customers. They're trying to look after staff, recruit staff, manage JobKeeper, and have a bit of a life at the end of the day. And so sometimes recording actual cash flow and seeing how they're tracking can fall by the wayside, not because they don't value it, but just because they're so busy. And so that's what I'd say. Watch your cash flow really closely. Because even if you're doing really well with sales and even if your margins on your sales are quite good and it's especially a trap with large contracts or big clients where they're a lot bigger than you are because they can pay on very slow cycles. And, if the guy's away, then now you're on next month's payment cycle. And that cash flow can really choke a small business. So being on top of that, chatting with the people who do pay your invoices, not just when it comes to payment or not just when they're late, but having that ongoing conversation so that you know when the payment's coming, so they're on top of it, because it's your money at the end of the day. You've already earned it, which is why you've invoiced them. You just now need to make sure it comes in so you can pay your own bills without stressing yourself out.
Now, just very quickly, I mean, one of the friends of Lunch Money is Michael Ford, and he's got a fantastic package called Castaway. I think it's an industry leader. Most people that I speak to have certainly heard of it, if not using it. I mean, is that the sort of thing? Do you use Castaway, or is it just a simple spreadsheet, or MYOB? What do you like to see SMEs using?
I don't mind what tool it is, because if they have a tool and they're using it, that's probably sufficient, because cash flow forecasting isn't complicated. There's a template spreadsheet that is what I give out to businesses if they don't have anything to start with, but there's software programs, Castaway, all these various tools available. The most important thing about any tool is that we're using it.
Yeah. Yeah, well, that's for sure. And Matt, we're just looking at what small businesses could do better. Your day job is obviously presenting your clients to banks and financiers to help them raise capital for equipment purchases or whatever it might be. I mean, what is it that what are the things that make your job a lot easier that you wish some small businesses were doing that they could do better, particularly given the environment that we're in?
I'm very much aligned with Louisa on this. Cash flow is so important. Continuing with that consultation process, but understanding your cash cycle. Because you win a contract, you may not get paid for a period of time, or you might need to buy the widgets to put the machinery together. So you need some sort of trade facility. So it's really doing your cash flows, understanding them and monitoring them, and actually getting the funds in place before you need them. We see it so often that they recognise that, they see a wonderful contract that they've earned and they're going to start making the widget, and then they go, oh no, I haven't got enough cash in the bank, I haven't got available credit. So our advice is to really, with those types of businesses, to understand your cash cycle and get on the front foot. And if they do that, then they'll continue to build on the balance sheets that they've built over the last sort of 6 to 12 months.
Now, a lot of the finance brokers I speak to, they're getting a lot of business, the equipment finance people I'm talking about now, but they're just saying that everything, the deal that used to take 2 days to get through the bank is now taking 2 weeks, if you're lucky. What are the banks asking for that they weren't asking for 12 or 18 months ago that SMEs would be wise to have prepped?
A lot of the streamlined products have come off through the relief period. They're starting to come back now. So it just means you're moving towards a full doc application. So you're really needing financials, up to date 2020s and some interims. They need to understand their debtors and creditors. So it's really, they've got to have all that in place, because you can put an application in, and given that those times have blown out, the last thing you want is more questions, because that blows it out again. So really they've got to. I tell my guys to get too much information up front. Rather than not enough, because you don't want to disappoint the client going back a week later for more questions.
Okay. Yeah. Well, my advice to small businesses is to get a good finance broker, because I'm sure, Matt, you've probably got, how many clients have you got that you've had for 10 years or more?
Oh, heaps. Yeah. Heaps.
And just hold one of them in your head and think to yourself, in that time, how many bank managers has that client had?
Probably a better question is, one of my best clients hasn't spoken to his bank manager in 4 years.
Well, the point is that I always say that a good commercial finance broker has got the corporate memory, and probably knows more about the business than the client does, and so, certainly from a historical point of view, in terms of relating the ups and downs over the years and what the requirements are and how the business ticks. All right, listen, let's just have a quick look at a few news headlines. Now, this one here, Aussie dollar bursts through 80 cents. Now, this is a bit of a double-sided coin, forgive the pun. I guess on one hand, Matt, you would have, it brings down the cost of capital goods. So you'd have some of your customers would be licking their lips at being able to buy, goods manufactured offshore cheaper. On the other hand, I understand that they're difficult to get hold of. I mean, is generally, when you look across your clients, is a higher dollar good or bad?
For importing equipment, especially when you're talking about the larger transactions, absolutely great. Like, it's wonderful. Yeah. But if you've got a client who's an exporter, it probably impacts them there. But I would say the vast majority of our clients are importing that heavy equipment. They're winning when the Australian dollar's going up.
Yeah, and you're seeing it. You are seeing that flow through to the prices of capital goods. So it's something that people are talking about, or.
It depends if the goods are sold in Aussie dollars, or when you're doing letters of credit, often it'll be in euro or whatever. So it really depends on the currency. That's depend on how it's sold as to whether it's flowing through. But it will definitely have an impact over time.
And Louisa, what do you think? I mean, how does it affect your world, the dollar? Is it Does a higher dollar mean more insolvency or less insolvency?
Not really. It doesn't really have an impact because someone's up if someone else is down. So if it's good for importers or good for exporters, it'll tend to be bad for the other one. So for insolvency itself, it tends to neutral out and it doesn't specifically have an impact.
Yeah, I guess historically, I mean, you were saying before, obviously the hospos and the tourism sector, I mean, usually a low dollar is good for tourism, but I suppose if you can't get into the country in the first place, it's
Then it
not
doesn't
going to
really
make
matter.
it's not going to make a big difference.
Exactly.
All right, look, we've got another. What other news headlines have we got? We've got this one here, which caught my eye this morning from the Wall Street Journal. You know, I know that people are talking about low interest rates and negative interest rates. But there is a little bit of a theory that interest rates could break out sooner rather than later. What are they? I guess, Matt. I mean, you're seeing interest rates from your lenders. You've never seen them that low in your entire life,
No.
have you? So
Never. No.
Yeah. So I mean, is there any? Yep.
I was going to say, my view on interest rates is, well, it depends on the tolerance for inflation, I guess, but I mean, I can see them going up well before the sort of 2024, 2023 years based on what I'm seeing now. I'll be very surprised if they're down this long for, 2-3 years. I think they'll start to move. But it really depends on what the tolerance for inflation is.
Yeah, I guess it's an interesting one, isn't it? I mean, if there was serious expectation of rates going up, then you would have clients wanting to, because equipment finance is all on fixed rates, right? So if you thought interest rates were going up, you'd sort of need to take advantage of rates now. But who knows? They could, they could as easily go down, of course, as they might go up. Yeah, I mean, look, I personally, I'm willing to put myself out there and say I think that interest rates. And this is not financial advice, so take your own advice. But it would not surprise me if interest rates break out a lot sooner than what you might expect. That's my view. I take a bit of a pessimistic view of all the money printing. I just don't understand how you can keep the illusion going. But I don't know. Anyway, what's your view on interest rates, Louisa? I suppose the threat is that if interest rates do go up, people that have borrowed home loans at 1.9%, if they're suddenly looking at 3.9%, it's 3.9%, not in your time, Louisa, but certainly in my time and maybe a little bit in Matthew's time, they're a lot higher than that. But 3.9%, for argument's sake, we would have thought that was a dream rate, certainly when I first got married, for argument's sake. So, but Louisa, what's your view on interest rates?
Oh, well, firstly, these good Asian genetics, I might be a bit older than you think I am, but hey, in terms of interest rates, I think they will go up. I have no insight as to when. I do know that people tend to not plan ahead for interest rate rises. And when they take a home loan or something, like you said, at a really good rate, very few of them I find factor in what happens if the interest rate goes up, a whole percentage point or 2 percentage points. And so that could catch some people out. I think the flip side to that is what a house price is doing. So this is on the residential side, obviously, because if there's equity in their house from the house prices going up, that may save them from issues anyway, because they might be able to refinance or do something like that or draw down on that equity. But I think it is something to watch because in times of economic prosperity, and if we're heading back into economic prosperity, there tends to be a little bit more availability of credit. And when there's more availability of credit, there tend to be people who mismanage it as well. So they do need to be quite careful that they don't overextend, but that they get the capital they need in order to grow their businesses or grow whatever they're trying to do with the capital.
Yeah, well, I've got a comment here that it's a little bit like getting a gym membership and then not doing anything about it. Sometimes with those. I mean, it's interesting that the thing about house prices, when asset prices do go up, as you said, all of a sudden there's all this equity and people are able to borrow, and it's a little bit of a problem for their accountants, because it means that people don't face their problems necessarily. It's borrowing your way out of trouble. I've always said that actually, Louisa, particularly when it comes to what you do and what we do in terms of providing cash flow funding, and obviously you're providing the ability to restructure. These things only buy time, right? They're not solutions, right? I mean, a restructure is not a solution any more than a cash flow finance facility solution. All it's doing is buying you time to address the problems, to fix the business, to or to make make the opportunity to grow. Yeah, I mean, I know, Matt, you're not. Do you have any home loan people under your roof, or do you?
Yeah, we do. Yeah,
you do?
Yeah, no,
okay.
We do that. Yep. We got 4.
Yeah. Okay. And what do you stick them in the back corner somewhere, or what's?
No, they work from home, mate. We're in Melbourne.
Right. Okay. And well, I mean, I guess they must be going gangbusters at the moment.
Yeah, they have. Yeah, it's been a great year from a home loan point of view. I mean, everyone's looking to refinance, and now you got the home builder scheme from the feds as well, and lots of incentives which have, really, we're doing a lot of house and build packages at the moment as well. So, and then you've got first home buyers still coming into the market. So, the home loan side is very strong.
Yeah.
Hey, Nick, just something you said there about restructure and buying time, that I just wanted to add something to. So sometimes a restructure buys time, but it depends how you do it. Sometimes a restructure can actually fix the fundamental problems. So just say that a business might have like the wrong cost structure, too many fixed costs, too many premises, too many locations. Say a lot of retailers or fashion retailers or mid-level fashion retailers have this problem at the moment. The restructure can actually fix some of the structural problems. But restructures are as broad in, type and nature as a piece of string is long, sort of thing. So you can use it as a tool for so many different things. So sometimes you're buying time, sometimes you're fixing cost-based cost structure, sometimes you're fixing, other things. So so broad. But yes, buying time is one of them. But it can be more if you want it to be more too.
I 100% agree with you. I 100% agree with you. But I think that it gives you the time to do those things. As long as you do the things, because it can. I'm sure you've seen many a time. I've seen, they go through the restructuring process, and all they really do is rub out their creditors, when what they should be doing is doing exactly what you just said, which no doubt happens under your watch, Louisa, which is address cost base and address asset structure and all of that sort of thing. All right, listen, believe it or not, we're sort of pushing up out of time, so I will give the second last word to you, Louisa.
Well, just going to say to small businesses, do be looking down the road at what is coming. Have a plan, write it down, talk it through, make it the best plan possible. Know that there will be variances to your plan because unexpected things happen. We've all lived 2020 where, it's the year of the unexpected. But you can do it. You can work it out. There's a path through it. So give it a go.
Louisa believes in you. Okay. And Matt, what's your closing thoughts?
Yeah, I echo that. I think it's a real time now to look for growth. I mean, there's opportunities everywhere out there. You've just got to do it smart. And so then once you know what your opportunities are, put your plan together so that you can access the capital to make it happen. So everything's just about planning and having the right advisors by your side.
Well, I think that my theory is something that's going to impact both of you is that I think there's going to be a lot of merger and acquisition. So a lot of businesses buying other businesses, particularly you said before, Matt, about businesses using their balance sheets. And it won't surprise me to see that strong businesses that have paid down some debt using their balance sheets to buy other businesses this year. And this will affect Louisa as much as it'll affect you. And with that, next week I have Andrew Cassam, who is a business broker, who's going to be stepping us through that process. Thank you so much, Louisa Sijabat, for joining us, and Matt Atkin. It's been fantastic. It's been a lot of fun, and you can tell how much fun it's been because it's gone so quickly. So thank you to all.
It's been an honour. Thank you.
No, you're very, very welcome. Very welcome. All right. Well, thank you to everybody who's watched, and we'll do it all again soon. Cheers.